Good morning, everybody, and this is your Dow Jones day trade setup for today. So first thing first, yesterday we mentioned this head and shoulders, and today it is glaringly obvious. So a couple of things on the 8 hour. Firstly, we did get a crossover of our oscillators pointing to the upside, indicating a potential bullish move. However, that has sort of fizzled out and we've got another crossover to the downside. So at the moment, as far as I'm concerned, you can see this is a lower high. We start breaking below this area here at 34,570. That starts giving us a lower low. Also breaks through the moving averages, and that would give us the validation of a head and shoulders. Obviously, I'd want to see a break and retest of this. At the moment, we are coming back to the moving averages and potentially looking to test the 155. Now, if we start moving down through the time frames, you can see we have a little bit of diversions brewing. So you can see low, lower low, and then low, higher low, ever so slightly. So I'd be very cautious of this. I'm always cautious of a head and shoulders in the US markets because often it doesn't really play out. Often it plays out, it sort of bounces off here back into a range. So at the moment, this is a clear, be very, very careful situation. And if you don't have a proper setup, just walk away from the charts. Preserve your capital, keep your money in your pocket. It is a brilliant trade, always profitable. So at the moment, this is kind of the setup we're looking at. You've got a pin bar here, off a little bit of structure. There is the structure there. You can see we found support at that area. Now we've rejected it. So those two levels are pretty important because it could turn out to be the range. So you can see we've ranged most of the week in between that area. So there's nothing indicating that we're not going to range. But we are coming up the 155 EMA as well. We don't have a crossover. So technically, from a moving average crossover strategy, this is still up. So the trend is still up. Oscillators grouping to the downside, which is a good sign. Now, it changes ever so slightly when we get onto the hour. So when we look at the hour, we've had the trend has been down. We never really got the crossover yesterday. Nice big engulfing green bar, but immediately the seller stepped in and sold that. So it's always wise. Pay attention to your moving average. You can see we didn't get a crossover. Ignore the 155 for now, but on the 33 and the 60, you did not get a crossover. They were still staying on their bearish mode, although they were going straight, or sort of say horizontal. At the moment, this is a downward trend. It was 3 days ago it actually turned, and the testing here, testing the 155 did work out for 2 days. Then yesterday it was all over the place with this squirt here. But nevertheless, if you want to be short, we want to be short of structure, and the structure is higher up. So for me, that's the area I'm paying attention to. And there are a few tails. There's actual fact, let's just put 2 levels in here so you see what I'm talking about. So you can see there's some area, there's some structure, there is a little bit more, and here's even more. So pull back into this area is what we're looking for. It's 34,880 and 34,789. And you can probably just put a Fibonacci on that and you'll see the 61.8 is somewhere in this area as well. The 50% will be here as well. So range-based trading at the moment. So pull back into this area, definitely looking for a short, small position, fairly large stop loss. Stop loss is around 300 points. And I'm looking for the bottom of the range again, which is just short of 300 points. So it's not even a one-to-one trade. This is the area to pay attention to. So 34,570, definitely a big area to pay attention to. If we break that, come back and retest it and then start turning, that would give you the validation you need for a head and shoulders. Just be very wary, because often what happens with the US market is it starts looking like it's playing out, but then it turns out to be a flag of sorts. I just want to come back to the 3 hour. So then it comes down sort of halfway to the target and then starts bouncing up. And then if you start drawing a channel in like that, it kind of just stays on that channel. So just be very wary of that. Don't assume that this head and shoulders is going to carry out. And also it is sort of, you're trying to guess a top when you look at the 3 hours because the trend is up. Okay, just down to 15 minutes. Yesterday, there's no ways you were going to get any trades yesterday based on that price action. I suppose the closest one was this one, sort of well into the open here, where you had this rejection. It's not even off a level, but gives you some kind of visibility that it was moving to the downside, but above and below the moving averages. And when you like that, walk away from the charts. That's not something to trade. Anyway, for me, probably still sit on hands, to be honest. I don't trust what's going on right now. There's no real logic as to moving up, and there's a lot more merit to moves to the downside. But at the same time, there's a lot of frequency trading here. In other words, computerized trading, algorithm trading, which is what we're seeing. So for as long as we keep doing this above and below moving averages on a low time frame like a 15-minute, this is a sit on hand scenario. Pay attention to this area, 34,789. If we do get back up there and reject it, there's actually an even better stop area. Somewhere around there. So you've got a 186 point stop loss for 200 point gain. So that's a little bit better odds at the moment. But also, you could be bottom of range. So don't assume it is head and shoulders. So you could just bounce all the way up to the top. So much going on. For me, I just want to sit in my hands and wait until something is glaringly obvious before trying to jump in on this. So it is another wait and see day. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.